Well, hello folks, I'm L.A. Little and this is your daily NeoTA wrap. Where we talk about these markets and we look at them from a neoclassical perspective. Each time we ask ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. Archived on YouTube under the channel L.A. Little. You can catch me there, any device, anywhere, anytime. That's the idea. As far as these markets, what did they do? It was an update. Yesterday we had a press down to the downside. Today it's actually the opposite. If I pull the numbers over here, you can see, these markets just press higher. They essentially took away everything they did bad yesterday. Composite up 0.75. The NDX itself was up almost 1%. Yesterday was down 1%. If you go across the board here, up on the equities, up on the commodities. The only thing down, dollar and interest rates. Up, bonds down. So kind of a strange brew, strange mix. And what's happening here? Why is it this way? It really, yesterday, if you remember, we looked at these markets and we said to ourselves, okay, well, with the NDX, the NASDAQ, the NDX breaking down out of the range, we're probably going to see some sort of a continuation of a range trade breakout that could take us down into the lower part of this, do a retest, regen on these prior highs. That was the ideal yesterday. We weren't that far away from that, right, to get down into that area. But today, complete reversal, under over, back inside the higher range. What's up with that? How do you do a takeaway bar on the very next day? What pushes something to do that? On the NDX, it actually did a full one. Well, the fundamental news out there today, there was 2 pieces, and they kind of drove these markets today. One was the Fed mouthpiece, if you will, the John Hilsenreich of the Wall Street Journal. He comes out and says that, it seems to be that they're going to keep that considerable time phrase in their statement tomorrow. And of course, that's the phrase everybody's worrying about, that it's not going to be a considerable time once QE's done before rates are going to rise. And given that, markets risk back on. They go right across the board. If you go in here and you look at things, look at the IBB, look at the SOXX, just look at all these high risk places. Money just flows right back into them just like it came out of them. That was the first piece. The second piece, China's central bank pushes out something like, I don't know how many billion dollars worth, but it was the equivalent, or so it said, the equivalent of about 50 basis point rate cut to 5 of their major banks, pushing liquidity into the system, right? And that, of course, is just like a rate cut for those guys. They go out and loan again, and that's what happened. And those 2 fundamental changes. Central banks again, always central banks anymore. I mean, that seems to be everything and anything. That drives this market, turns it around, heads it back the other way. All the trades that were pulled off yesterday were put back on today. I guess that answers that question of was it Alibaba raising money for that IPO, or was it really just risk off? And yesterday we kind of thought it was risk off given the way it was taken off. Well, today it's risk back on, and we're going back the other way, it looks like. If you look at the Dow almost broke out today, went up, tested those highs. It's actually got a little less volume than it needs still. I mean, this high over here, it's got 992 and you're doing 732, but what else is new? There's really not a lot of volume in this market anymore. Same thing here, you got a little bit more volume today on the S&Ps. S&Ps almost back up to the middle of the top end of the range. S&Ps, they had been drifting lower, and initially the initial range was in here, right? And then they kept expanding it and they got it down this far. So now we're heading back the other way, and we're about halfway up in that range and pushing back towards the highs. And it looks to me like they're going to take a shot at the highs again. got the Fed meeting tomorrow. That maybe provides the impetus to make that run, make that stretch, make that move up there and test it one more time. Big long range here, the longer it lasts, you know, the more powerful it's going to be when it breaks one way or the other. The laggard continues to be the Russell. The Russell continues to be down on the year. Got a little bounce today, had more volume though. It had finished up an ABCD structure on the downside. So at this point, you know, you're kind of in a no man's land. If the rest of the market wants to head higher, I suspect they'll drag the poor old Russell back up with them. So Russell trying to, you know, at least stay with them somewhat. Usually the Russell, once it gets going, then it continues for a while, so we'll see if it gets going again. But if you ask me, are we going to get that next leg higher, folks, it still looks range bound. We're getting a lot of thrashing up here. That's not surprising given the big news with the Fed. But if you look a little farther out, and that's really the next piece of this, is if you look a little farther out and you start thinking about earnings, you know, you've got some late comers on the third quarter earnings that you can kind of watch. One of them's Adobe. Adobe come out tonight. They missed their earnings. Well, they actually hit their numbers, but they missed on guidance. They lowered the guidance for the next quarter, and I suspect we're going to see that on more than just Adobe. We're going to see it in a number of stocks when those earnings starts coming out in about 3-4 weeks from now. That to me is probably going to be the real next big driver. People are going to start talking about it in about another week or so. Adobe was coming up here, got over this high, went up and tested these highs, had broken out, comes off, comes off, comes off. With a weak market, spikes back up today into the earnings expectations, and what do? They find themselves down here tonight. So sell off here, and I suspect we're going to see more of that. And we may start to see those numbers get ratcheted down. So far, nobody's really pushing them down yet in terms of analyst numbers. So that's the indexes. That's potentially what's coming, kind of a preface of what may be coming in earnings season that we need to be concerned about. If we look over at the rest of this to try to get a wrap up for today, sectors still look strong. I showed you the two of the big moves today on those. If we look over the world markets though, you know, it's become very mixed up out here because, you know, if you remember about 3-4 weeks ago, we were in that stall, right, just kind of hanging around, couldn't go any higher, but the rest of the world was just going up, up, and up, and they weren't giving it up. Well, now they're all, not all, but almost all of them are heading back the other way, and they're heading back with a vengeance. Back at the lows on the Australian market, the all ordinaries coming back towards the lows. Now, you know, of course, a lot of this is mining, a lot of this is tied to China. I would expect they get a bounce tonight out of China news, but, you know, pretty big sell-off here. And it's not just there. I mean, look at India. India has had huge runs this year, and India is finally coming off of some volume tonight, or actually last night. Moving on down to some of the others, like the H shares themselves in China. I suspect they'll get a bounce tonight as well off the news, but, you know, they broke some major, you know, major price point moves to the top side here. So this looks more like a range trade than anything else at this point, even with a bounce. In Hong Kong, no different. You know, it broke multiple swing points on the downside. Those look kind of stuck. And then you go to something like, say, Indonesia, where, you know, one of the low-cost producers in the world, they just got hammered. I mean, huge volume. They come out, they break this low. This one wants to go lower. It wants to go back, you know, on a weekly basis. It wants to go back and test lower. So, you know, I'm not sure what's driving these markets, Taipei being another example of it, but they are definitely not bullish anymore. Taipei was one of the first ones to come off, right back down, testing those lows again. So the world market's not as strong. Where you would expect weakness, you find strength. The CACs, the DAX, and the FTSE. Right? Nice big spikes up, a little fades back in, look like they want to go higher, and off this news today, they probably will. So that is the world markets. The only other place we probably want to look real quick before we give up our ideal about what we think this market's going to do. Emerging markets, big bounce off again off the news today, big spike. Again, I suspect that's what will translate in other markets. Gold tried to bounce, really couldn't get much going. The bonds themselves, though, really cannot move. I mean, here's the high corporate bonds, the junk bonds, the municipal bonds. All of these are struggling. And if you go to the bonds themselves, the treasuries, here's the TLT 20-year. It can't move. You know, even goes lower today on this Hilsenbrock news, right? It didn't turn it around. Same thing on the 7 to 10 year. What got faded today was the dollar. The dollar comes down. If we go look at some of those currencies, you see some big spikes in some of these currencies after big sell-offs. And so what we're seeing is a lot of violent moves in currencies continuing both to the downside, now back spiking to the upside. I suspect that has a lot to do with what you're seeing in world markets where they are under pressure at this particular point. Okay, let's give a wrap here. So what do we think is going to happen tomorrow, the rest of the week? Well, tomorrow, of course, is Fed meeting. If you look at the NASDAQ, you've got to say, okay, when I see something like this, and let me pop these back up. When I see something like this take place, and I'll use the NDX since it's the best example, that takeaway bar, what is a takeaway bar? A takeaway bar is a bar where something significant happened, right? That significance, in this case it was yesterday's bar, that significance was a break of a range which should lead to continuation, some follow through to the downside. So do we get that? No, we take it away the very next bar. That's a takeaway bar. It comes in, it erases all the goodness or badness, in this case it was badness, on the very next bar. So what does that do? Think about that, what that does. Anybody that sold yesterday were forced to reverse their positions today. And so it's kind of a thrash case, right? And anyone that didn't today, if this thing does spike a little bit more tomorrow, they're going to be pressured to cover as well. So in other words, if they went short, they're going to be pressured to cover those shorts. If they sold some of their longs, they're going to be pressured to buy them back. And that sort of pressure can lead to another spike higher. That's what takeaway bars are famous for. I coined that term a few years back. I don't know, I'm sure there's some equivalent name out there of this structure, but it's something I noticed before is when you see these kind of takeaway bars take place, what does it mean? Well, it means that, the trend as it looked to be breaking down, right, in fact, is really about to squeeze you right back the other way. And what I mean by squeeze you, it did today, but it's going to probably follow through. If that's true, then what are we going to do? We're going to find ourselves right back up here at the top of the range again. And on the S&Ps and the Dow, they're up there testing those tops probably. And if this runs, it will do the same. It'll be up there testing the top again. So what do we think is going to happen? I suspect we're going to see these markets try to rally on the Fed news tomorrow. Now, will they hold? Will they extend? Will they be able to get the next push up? Will those weekly ABCD structures fire? And you don't have it here, but you do have it. Well, actually, you do have it here. There is a structure on this one on a weekly, and it's actually a fairly large one. It is from, it looks like it's from here. I'd have to look at it more closely. But that's a fairly large ABCD structure on the upside. And you got them in here, potentially in the Dow. If the Dow breaks out, you already have it in the S&P 500. And so you've got these bullish weekly ABCD structures that measure quite a bit higher. If we break out, that in fact is what we're going to see, and that would be a fairly heavy spike. So my take, look for us to spike up. Can we break out of the range? Not clear to me yet. We'll have to see what it does when it gets to the top, but it does look like, we took away the badness and now we're heading back the other way. Let me take a quick question. I'm going to make a short show tonight because there wasn't a lot of questions, and I really don't have anything to highlight tonight. There's nothing, I've highlighted the major piece, which was the takeaway bars. But let's go to the question. There was a question about a stock PLCE. The question was, the gentleman got into this stock 52 and a quarter or so. He was testing into this. He probably got in one of these 2 days. And then it went down a little bit, now it's back up. And the question is you know, where's this thing likely to go? And he's saying, hey, I'm just trying to get to 54. Should I stay into a stock that I'm trying to get just a little bit of profit and potentially end up losing on it, right, if it heads down again, and with the Fed coming up and all this? Or should I instead just take my money and get out? And so the first thing I would note in this particular case is that you actually have a range, you know, a big range bar here. And what I mean by that is this large volume, high spike bar, usually when it comes back into this area, usually it's going to find support, and this one actually got a little bit underneath it, but there's some slop in these things. And then it's going to head back up and it's going to test the top. Now in this particular case, it was slightly different because it tested it right away. The top here on the spike on the earnings was 54.55. You went over it, 54.64, and closed under it. That told you we were going to get the pullback. You get the pullback, what's it going to do? Well, I don't think it's going to get past that top of that range. So your best you can hope for is 54.5. You got this bar, it's kind of a breakdown bar. That's at 53.67. So you might not get any more than, you know, that little range there. Okay, so that would be my first thing. So what's your upside? Your upside's there. What's your downside? Well, your risk now is this area. And where are you? Well, you're kind of in the middle. So what do you want to do tomorrow? Well, given the fact that you're not as certain, and given the fact that I just gave you this analysis that you're probably not going to break out up here, right? Not yet. You know, you only got $1.50 upside max, and you got about $1.50 downside risk, and you got a little money on the table right now in terms of profits. And given the fact that you're uncertain about it, you should take your money. You should just take your money. You know, there's always another trade, folks. You don't have to be in it. If you look at a stock and you say to yourself, hey, would I not buy this stock now? You know, would I buy this stock here? You know, is the risk reward, does it make sense? You know, and if you're uncertain about it, well, you shouldn't be in it. And that's the case here. That's what I would do. I would probably take my money and just walk away. Go find another place to play, make that little bit of change you made on it, and just move off and find you a better stock. All right, that was the question tonight. Please send in your questions. I'd love to take more of them. I'm allocating about 10-15 minutes a show just to answer your questions, but you got to ask, right? If you don't ask, then I will just highlight things that I want to highlight, and I'll start doing that probably tomorrow unless we get some questions. Thanks for joining me. Thanks for tuning in. Have yourself a great night. I'll see you next time. Until then, I'm LA. This is and it was your daily NeoTA wrap. Have yourself a great night. Until next time, I'll see you then. Good night, folks.